Welcome back. I'm Steve Rand. This is Joe Elkier, and this is the Gold Spot. Joe, we're getting a tremendous amount of comments on our website. People looking for what is de-dollarization. It's a term we're starting to hear a lot more of as more countries move away from the US dollar. The US dollar has had the reserve currency status for nearly 80 years. The British pound sterling was the reserve currency up until 1944, and then it went to the United States, I should say, and we've had that luxury for the last almost, like I said, 80 years. But why is the dollar king?
Steve, there's a number of factors that play into this, but the big one, especially the glaring one right now, is the petrodollar. For basically 40 years, or since the early 70s, even longer, the majority of oil trades around the world have happened in dollars. So that's billions of dollars every day. And so that's huge amounts of dollars moving around the world. Saudi Arabia has announced that they're open to trading in other currencies. So as that demand wanes and we see more and more countries transacting in different currencies for oil, we've seen interest in the BRICS nations now rising. And there's a lot of talks with BRICS having commodity-backed currency. That impacts things greatly, and as we continue to lose demand for dollars, that's going to really impact it. So since the 80s, people have flocked to dollars, savers, countries, as a safe haven, as a protection. As that wanes and things change and we see shifts around the world of countries looking to move away from the dollar, countries actually thinking of the dollar's weaponization, wanting to get away from it completely, that's going to impact a lot of things.
No question about it. You got to remember that the US dollar has been the reserve currency for so long, and that's allowed us to run really large deficits. But if we don't have the ability to do that, that means inflation to the levels none of us have ever seen. I mean, can you imagine right now just buying a home? Think about what a home costs. Think about what groceries cost. But those numbers could go up even exponentially from there. Yet the stock market risk at that point is going to be significantly higher. They're going to have a lot lower stock market values. So there's a lot of different things that would be impacted. Our way of life would change. Our cost of living would certainly soar. And that's why it's so important that we maintain this. But with other countries moving away, you can remember that almost 90% of transaction or foreign reserves used to be about 90% were in US dollars. Now it's down to 58% worldwide. Consequently, in the last 5 years, gold reserves held worldwide were 11% and have moved to 15%. So we're seeing a shift in things going in another direction because countries want gold to not necessarily back their currency yet, but to certainly be a bigger part of their reserves and move away from the US dollar. Go to our website, request the Central Bank Digital Currency Report and the Petrodollar report that Joe had mentioned. See you next time on the Gold Spot.